Have you ever wondered about the cost which businesses incur when they are financing their operations? My name is Dr. Johnny Nyamunda, and today we are going to talk about the weighted average cost of capital. So we say when we talk about the weighted average cost of capital, we are saying a business enjoys financing from different sources. It can be financed by shareholders who require dividends and capital growth. That is the cost to the business when it pays dividends and capital growth. It can be financed by the bank. It can be financed by the creditors. It can be financed through debentures. All those parties require interest from the business, which is a cost to the business. Let's assume you know of a business called Zama Cafe, which is financed as follows. It's financed by ordinary shareholders, preference shareholders, and loans or debentures. So let's assume that it's financed 350,000 by ordinary shareholders, which is 70%. Why is it 70%? We are saying 350,000 divided by the total financing of 500,000. It's financed 100,000 by preference shareholders, which is 20%. It's financed 50,000 through debentures, which is 10%. So if we want to find the weighted average cost of capital, we also need to say what is the requirement from the ordinary shareholders. So we are saying ordinary shareholders require 20% as a cost, or a return, which is a cost to Zama Cafe. Preference shareholders require 15%, and the bank or debentures require 12% interest. So we are saying, how can we calculate the weighted average cost of capital for Zama Cafe, assuming there is no tax? So knowing all this, they will say, what is the weighted average cost of capital? So we are saying 0.7 times 20. Let's pause there. Where is it 0.7 now coming from? We are saying 70% is the same as 0.7. So 0.7 times 20, which is the first line, 0.2 times 15, which is the second line, 0.1 times 12, which is the third line. If we do that calculation, you will find 0.182, which is the same as 18.2%. My friend, you know, it's never enough to talk about these things without you doing your own practice, your own question. So you pause the video and attempt this question about Ashika Investments. Pause the video, do the calculation. Once you find the answer, then you go to the next slide. If you got 13.4%, well done, you are too brilliant. But you would have said 0.5 times 16%, which is highlighted in blue for ordinary shareholders, 0.3 times 14, which is highlighted in gray for preference shareholders, and 0.2 times 6, which is highlighted in yellow, which would have given you 0.134, which is the same as 13.4%. So what did we say today? We said to calculate the weighted average cost of capital, we need to take into account the weight and the cost. And then when we add that, we will find our weighted average cost of capital. Thank you for joining this corporate finance discussion in 5 minutes or less. Goodbye.